Well, if you look at it from the extended stay hotels, there's close to 50,000 rooms currently under construction in the US, which is the largest total there's ever been. In percentage growth terms, with over 400,000 rooms open, we're not at peak yet, but we're clearly getting to that point. Well, if you look at the extended stay, the difference this time is that average occupancy has been at 76% for 7 consecutive years, and basically hasn't declined except on a quarterly basis, and it's actually turned upwards. The last peak of the cycle between 2005 and 2007, it peaked 3 percentage points lower before it took a significant dive in 2008 and 2009. That hasn't happened yet. I think it's going to be a couple of years before anything measurable happens, unless we get an event. If you look at the last 2 downturns, one was the post 9/11. We were already in recession, although the statistics from the government haven't proved it yet. Then we got 9/11, and that precipitated a correction in the hotel industry and extended stay, although it was delayed somewhat by a couple of quarters. And then if you look at 2008, 2009, it was the financial crash, and to some degrees a construction-led recession. Nobody at this point is predicting an event like that or a recession. And one of the last hotel-related economist events I went to, the individual who I saw 1 year ago as well said that the risk of recession now is less, in his opinion, than when he gave the same talk a year ago. So if you look at revenues as well, typically during this point of the cycle when we're going down, the percent change in revenues declines. But with extended stay hotels, it has hovered around 10 to 12% annually for 5 or 6 years, and demand has turned upwards. So there's no imminent sign that that is going to correct anytime soon. It is that in the simplest way, it's less volatile. If you look at the peaks and troughs of supply and demand during the last 2 cycles, they've been a lot deeper than during this cycle. And we've got a very, very consistent revenue increase for a period of 6 or 7 years, and occupancy has stayed above its long-term average for 7 consecutive years. It's in the mid to high 70s, whereas its average is about 73. And the previous 2 cycles, it peaked at 75, 76 before declining after about 3 years. We're on 7 consecutive years now of very steady occupancy, very steady demand growth around about 5 or 6% a year, and has just turned upwards to 6 to 7%, which is very unusual at this point in a cycle. Yes, there are. There are 50,000 odd rooms under construction, but out of the 100 largest markets in the US in terms of population size, 35 to 40 actually had none. So it's concentrated in certain areas and certain markets. And other markets also tend to be underserved, especially with economy extended stay product. And then we are now in the stage of replacement, as the average age of extended stay hotels in some markets is now well over 20 years. So you've got a replacement of aging and obsolete product opportunity as well. Well, there are a lot, but just something that springs to mind. There is no branded economy extended stay product in San Diego. 60,000 hotel rooms total. Riverside San Bernardino, which is about a 45,000 hotel room market, and the economy segment is clearly underserved.